We're running a bit of a series. This is the last week of it where each of our experts on the panel, we asked them if you had to pick one stock for a future fund, a fund that you wanted to put together to pay for your kids' education into the future, or if you're a grandparent, put aside for your grandkids to help your own kids out to put through your grandkids through education, what would you put to the portfolio? Andrew, let me guess. I've got a premonition. It will be an ETF.
Yeah.
Koshy, you're a mind reader. I must say though, and I know we are short on time, so I'll keep this brief, but right. I noticed it was yesterday that one of your panelists had Argo.
Yes.
Argo was a very close second. Very close second.
Okay. All right. Gary Glover from Novus had Argo. That and Australian Foundation have been around forever, haven't they? In terms of listed investment company. Yeah.
So for the cricketers out there, it was Bradman's company there, South Australian based, of course, Koshy. So yeah, certainly Argo is a goodie. But ladies and gentlemen, mums and dads, boys and girls, Henry, today's choice from Vanguard and a diversified ETF, VDGR. Right. And it basically buys 6 underlying Vanguard funds. So that's one of its strengths, but it's potentially also one of its weaknesses, that it's not as diversified across managers, but it has a range of exposures: Australian companies, international companies, fixed interest, small companies, bonds, etc. And the fund has returned, it's been going about 4 years, but it's annualising about 9% per annum returns. And so really the whole idea around this, and one of the reasons I really like Argo is because its performance has been pretty sound, but its biggest issue is that it's got a lot of what we call concentration risk. So in other words, it's all in on Australian shares. And as we know, there are periods of time where there's a bit of pain about. So from our point of view, we like VDGR because it just gives you that 30% cushion, 30% in defensive assets. So if there's a bit of pain about, it sort of cushions you. So VDGR is the one that we use in the Wielandt household.
Okay. Henry, what would be your stock?
Well, it's not an ETF, David. You'll be pleased to know. Otherwise, it would be the ETF show today. Yeah. And we're not going to go down that path. The one that I picked, I guess, I looked at stocks that have the greatest, most powerful force in the universe in terms of compound interest, as Einstein said. And that is always a great wealth creator, especially for young people. But I did actually pick one that I thought had some serious diversity, some bit of future fund-ishness in it because of where it's exposed, and that was Wesfarmers. Now, that may sound a little dull, and that does come from the Republic of Western Australia, which is soon to separate along the COVID-proof fence. So I just looked at Wesfarmers. It's got a number of really good businesses, and we all know the Bunnings, we all know the Officeworks, we all know Kmart, etc. But it's got a pretty strong balance sheet, to say the least. So strong that they're paying out $2 as a special capital return, provided it is approved at the 21st of October meeting. So it's got a strong balance sheet, really good management. It's got a very disciplined approach to acquisitions. And it's kind of a diversified conglomerate because not only has it got the household names that we've talked about, but it's also got specialty chemicals. And just to give it that future fund kicker, the sort of exposure to the futures, it does have the lithium exposure when it bought Kidman Resources for $1.90 back in 2019. And that gives it access to the Mount Holland project with SQM. So it's got a lithium kicker, which I don't know if anybody really focuses on that with Wesfarmers. No. They tend to look at Bunnings, Officeworks, etc. But it has got that lithium kicker. The other attraction, I guess, is that it is currently in a bid for API, which is the pharmacy group, competing with Sigma Pharmacy there. They've offered, I think it's 155 cents in cash, whereas Sigma are doing kind of a merger proposal. So they are a disciplined mob. They don't pay up. They tried to have a go at Linus, if you remember, to get that exposure to rare earths, missed out because the stock just sort of kept going up, and Amanda Lacar's just said, no thanks, we're not interested. And rightly so at the time. But I think for me, Wesfarmers got that nice conservative bias with Officeworks and Bunnings, plus the lithium kicker, specialty chemicals, disciplined management, good growth profile, and what's better is that it's been whacked recently as well. Yeah. So kiddies, you might be getting a bargain from your old Uncle Henry.
And also, it's sort of got a private equity feel to it, doesn't it? In terms of a listed private equity firm, and it does it well.
It does it very well. It's come off its highs, $56 it got to, back down to 54. I think there was some, a few things that worried the market maybe, but here we are in reopening trade. We're all going to whip down to Officeworks in person. We're going to be running around the aisles of Bunnings, trying to find middle-aged blokes in aprons, asking them questions as they scuttle off like cockroaches here, there, and everywhere, trying to ignore you on a Saturday morning. But for me, that lithium, the specialty chemical, they show great discipline with their acquisitions, good capital management. Rob Scott's done a fantastic job there. It's a West Australian icon, and I'm, at $54.
Yep.
Kiddies, fill your boots.
All right, let's add that to our portfolio, Wesfarmers and the Vanguard Diversified ETF. We'll keep building this little portfolio until the end of the week. And then, because I get so nervous in October, next week I'm starting a different series of from each of our experts, the one stock they would have on their watch list for a crash, to buy in a crash, because I don't know, I'm too old. I remember all the Octobers where the thing just fell over and I'd get very nervous, and the market looks a bit scary at the moment to me. It's all over the place. So we'll start that next week.